Happy Halloween. The only thing scarier than Halloween is what rates have been doing. Hey, we're going to start this off with a riddle. What's not alive, not dead, but doesn't breathe? This coat. It's really, really hot. It's amazing what $50 on Amazon won't get you these days. All right, team. Here is the reason why you may be thinking, like, why didn't you pick a background? Because this is what happens. And it's freaking awesome. So we're not going to have a background like I wanted. It is what it is. But let's talk about rates and all that fun stuff this week. All right, time to share the screen. If I can remember how to do that. The zombie brain is Beetlejuice, technically. So there you go. That's a good looking picture right there. Oh, by the way, my eye, you may or may not notice some social media folks. Dan, I know, called me. I was like, do you have pink eye? No, I don't know what it is. Went to the eye doctor this morning and they said I can't get the makeup too close to my eyes. So that's why we're a little not quite as genuine as we want to be. But weekly rates, guys, they still stink. Check this out. They've been kind of sideways this week. According to this, they've actually gone down just a touch. Mortgage News Daily, they're at 7%. And remember, this does have some form of points associated with it. But here's some good news coming up. Inflation, it's down. I mean, it's still targeting. Well, I mean, it's up a little bit right now from the headline, but it's still about where it was. 2.65 to 2.72 is the same in my book, right? Round numbers are both 2.7. The problem is we just don't think we're going to make any real headway for the next 3-4 months on inflation numbers. So that is what it is, but it's at least still lower. But man, it's been tough. We've had some stronger job numbers come out this week from ADP. Tomorrow is the big ones. We'll see what happens. But here's the good news. You guys can see the red. This is hot off the press. The NBA, they just had their national thing in Denver this week. So this is hot information off the press. So according to the NBA, Mortgage Bankers Association, they do think that rates are going to come down to around 6% in the years to come. They think it's going to hover right around the 6%, not low fives, not mid fives. They're now doing their forecast around the 6, and you guys can see that red line where it kind of goes sideways for a few years. So we'll see if they're right. Time will tell. But you can also just see the other pieces that I think are really interesting. If you look at the blue and the purple, that's the 2-year, or pardon me, the green and the what's purple. You can see that normally the green line is going to be higher because that's the 10-year treasury versus the 2-year treasury, which is the purple. But if you notice, and this is what got wonky in the last handful of years, since the Fed's been doing their thing in like 2002, 2003, all of a sudden the short-term money, the 2-year, became a higher rate than the 10-year, the long-term. And that's normal when the Fed goes to that type of cycle. But those are also recessionary indicators. So that's the yield curve. But this is just a really cool graph, really pretty. Thought I'd share it with you. This one is the really optimistic, like I can't believe it, but they say it. So here's the NBA. The part to look at is let's look at the purchase business, the upper left. Upper right is refinance, and the bottom's the total. But let's look at just the purchase business. So with this forecast, they're saying if rates were to go just to their 6% number, you can see in 2024 on the left, 1.2 billion or whatever it is, or maybe that's trillion because technically these are in billions. So $1.28 trillion worth of purchase business or whatever that is, goes up to about 1,700, give or take. And that's the blue line in the middle line. Now what they're saying is if it's the orange one, says that if rates go up 100 basis points, meaning 1 point, where they basically stay where they are, it's still over the next 3 years, increased purchase business coming. Even if rates stay where they are or go higher, they're thinking that rates, even with higher rates, the purchase market's still going to do really well. And the green one, you can see that if they do think if and when it goes lower than what they're kind of forecasting, then it's going to be just like, 50%. It's not 50%. Close to it though. 40% higher, more business. So that's incredible. So either way, looks like purchase business is going to be on the rise. And again, a lot of that has to do with what we've been saying, which is millennials and just job or household creations, formations it's coming around and those folks need to buy homes. So they do anticipate that there's still a demand in the coming years, which means home values will probably stay where they are, if not increase based on demand. Apartment complexes, the completions have surged. They use that word, 42% year over year. Again, that's a good thing. There's a shortage of housing. But again, I don't think that's enough to ultimately come in and make a big dent on house prices. The Wall Street Journal, Realtor, this slide was like, I just threw it in there because it's a graph of the map and I like it. It's a map of the United States. Northeast apparently is doing really well. Good for them, but there's still some dots. Texas has, looks like Dallas and Houston in there. Essentially, these are low cost of living. These are the top markets. It makes sense. A lot of it's Ohio. So good for you, Ohio and Pennsylvania. You guys have been on these slides recently. So good for you. Let's see here. Next one. Oh, the slides. Killing me, Smalls. Killing me, Smalls. There we go. There's a $55 million mansion that's up for sale in California. So apparently Ferrari's doing an exclusive event there. So good for you. But it's $55 million. I don't know. I mean, think about that. You got to earn 100 million. Then the taxes make it down, go down to 50. So it's like, how much money do you have? So good for these millionaires and billionaires. And just, I want to know what they do besides, like, there's only so many people that own Amazon and Microsoft. What the hell do the rest of these people do? Good for them. This was sweet. I can't wait. Monday Night Football, The Simpsons. I don't know how, I didn't quite understand this. I read the article, but I saw this morning. On December 9th, The Simpsons are going to have like, there's the football game is going to be telecasted from Springfield. So The Simpsons are actually going to somehow be part of the broadcast. You can find, I think it was like Disney Plus and ESPN Plus. So just check it out. I know I'll be reporting back, but apparently like Marge and Lisa are going to interview players. I don't understand how it's going to work. Time will tell, but I just thought that was really fun. And lastly, if my clicker will work, it's not, but when it does, we'll see if it gets to it. If it doesn't, that's okay. Well, there we go. We skipped it. So the meme of the week I thought was really funny. Apparently, some dude way back in the day in Major League Baseball hit a poor woman in the head with a foul ball, and she was on the stretcher. They're carrying off. Another foul ball hit her again. So who knew? That's bad luck. As always, guys, forward, share, subscribe. We appreciate you as always. It's a little quicker and shorter because we got our Halloween luncheon coming up today. So we got to get that done. Tomorrow is job reports. We'll be reporting on that next week. As always, when you think mortgage, think Mark, and have a happy Halloween.